Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, January the 5th. I'm Eric Wilkinson. You very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that all comes in to impact the markets with some of my market analysis. I do the same thing for you folks out there, but I go a little bit further and talk about these option strategies I'm implementing into my portfolio based on those assumptions I come up with my market analysis. I even go a little bit further for you folks out there, and I've streamlined the process over 25 years of trading options in order for you all to implement a strategy into your portfolio based on that assumption. We aren't talking about just buying a call for a bullish assumption. No, what we do is we look at that underlying and then discern what's going on, pricing of the options, and then take advantage of all of that with our directional assumption. So please check those out because like I said, streamline that process, give you a guideline to follow in order to find the optimal option strategy for any given assumption. All right, so without further ado, let's get on with that economic data, see how that's impacting the overall markets, and maybe come up with some directional assumptions. Well, today it seems like for the most part, it is turn those hands around. Well, that's what we used to do on the floor. It was turn around Tuesday, and it meant whatever was the day before, you turned your hands around, being if it was a buy day the day before, now you're selling. Well, yesterday, we saw big selling pressure. As a matter of fact, a lot of people got a little bit nervous about a correction and started putting on some protection to the downside, meaning buying puts. What has that done? It's driven volatility up. So is it a time or opportunity to take advantage of that? I think so. So we'll talk about that once we get to my trades. But before we get along with that, let's get on with across the pond, some economic data. German retail sales coming in at 1.9%, expected to be a negative 2%, so knocking it out of the park there. That's giving a little bit of oomph to the upside. We also got some employment numbers there. Germany doing much better than Spain, but Germany being a driver there, much better than expected. And we also have those OPEC meetings going on. They got delayed for some reason earlier on today, but they are probably in full swing at this point. And then back here in the United States, we got our own economic data in the form of the ISM, which remember is the Institute for Supply and Manufacturing PMI, which is Purchasing Managers Index. Remember, the Purchasing Managers Index is forward-looking, so that's the one I really like to look at. We talked about one yesterday, and that was in the flash estimate, but this is the one we look for. Anything above 50 is expansion in the economy. Anything below 50 is contraction. Well, we are looking at some really good numbers here today. Manufacturing PMI coming in at 60.7, expected to be 56.6. Also, manufacturing prices paid coming in at 77.6, expected to be 66.0. I think a lot of that probably has to do with some of this oil price moving higher. But at the end of the day, those data points are the best numbers we've seen since before the pandemic, especially for the manufacturing sector there. That was back to 2019 levels, or early even into 2018 levels. So really good to see the manufacturing numbers start to ramp up. And then also throughout the day, we're going to be getting the Ward vehicle sales. And that's going to be a real driver of the automobile industry, or a real lagger. But at this point in time, with that turnaround Tuesday, it seems like the automakers are making a bit of a move to the upside. And then later on this afternoon, we have Evans, who is an FOMC member, speaking as well. So that's all the economic data. Pretty good on our front. That's why we're getting that from selling pressure to the turnaround Tuesday, and people are starting to buy. But it seems like my portfolio is a complete pairs trade, and those stocks aren't really correlated. Anything that was having some major selling pressure yesterday is making a move to the upside, and vice versa. If it had a good day yesterday, we're seeing some weakness here today, at least in my portfolio. All right, so we can see that kind of represented here in crude oil. That's probably because we're seeing those manufacturing numbers ramp up, that they are expecting some demand for crude oil. And we also had that OPEC meeting today as well, and they're probably going to try to cut back on some production because we have such a huge inventory globally right now. But we're seeing this market move higher by $2 and wanting to test that $50 a barrel mark today. All right, gold futures continuing their move to the upside now that we are solidly inside of that 1900 handle. Yesterday, a rip to the upside. Bitcoin was actually having a bit of a sell-off, and some of that had to do with some stable coin, which is going to be backed by gold or something like that, I believe. I don't know a whole lot about the cryptocurrencies, but just by reading bullet headlines and stuff like that. So that's making a bit of a move. I don't know if people are rolling out of some Bitcoin and into this stable coin, but all of those things being said, we're seeing some strength here in gold futures again today. Maybe it's because everybody got a stimulus check and they are expecting a weaker dollar. Who knows? But right now, bonds off by a point, meaning interest rates are moving higher. I don't like to see that. I would like to see us stay above this 50 Fibonacci and stay at least in the 170 handle here, breaking down much below where we are right now, and it's going to look like that 170 handle is kind of out of the picture. But I think that interest rates are going to stay low for a foreseeable future anyway, and that would drive bonds higher. But you know, the markets can stay irrational longer than we can stay solvent. I'm not involved in treasuries at this point in time. Looking to very close soon, maybe even some munis, but we'll have to see. All right, VIX continuing to stay elevated today after a spike yesterday into the 30 handle. That's where I was talking about. You usually see that VIX spike when people are looking for protection, usually buying puts, and we're seeing across the board some volatility expansion, and maybe the time to take advantage of it. I'm going to certainly. All right, bonds back into positive territory. I thought when we started this, pretty sure when I started setting up these charts that we were in negative territory by about 40 points, just slightly moving into positive territory by 35 right now, and trying to claw its way back above this 9-day simple moving average right there. You can see we settled below that, and that would normally be considered a little bit of short-term bearishness, but now we're clawing back today and trying to get back above those lines in the sand to get our bullish market moving back to the upside. All right, so without further ado, let's talk about NASDAQ. NASDAQ yesterday looked like it was coming back into my trend channel, but we're just kind of bouncing along the top of it, which is just fine. That is a good trajectory, and I've talked about that many times. As long as we don't get these parabolic moves like we got coming out of that pandemic, that usually causes a little bit more of volatility on corrections. With this kind of move, it's really a nice steady move to the upside, and would expect volatility to come out if we're starting to bounce along those areas. And here again, E-mini S&P is trying to get back above that 9-day simple moving average right there. All right, overnight, pretty quiet. I mean, it's not really, I guess, that quiet. It was pretty volatile, but what I meant to say was pretty flat on whether it was bullish or bearish. It was, you can see they basically flushed themselves out back and forth throughout the night session. Coming into the day session, we made a move to the upside. But again, it's just a pretty sloppy pattern here. Market really trying to read the tea leaves, and it's just not very clear at this point. To me, the risk is to the upside right now, especially with the stimulus package getting through. I think a lot of people will be starting to spend. That should help the economy heading into 2021. Well, we're already in 2021, but throughout at least the next couple of months. All right, I just wanted to talk about a couple of those bear trades I was talking about yesterday. Remember I said turn those hands around. If you were buying yesterday, today you're selling. Well, you can see a complete retracement here in Walmart and PENN. On the flip side of this, something to note, David Portnoy, along with Lemonis, started this fund for small businesses, and it is up. I think they had a goal of like 3 or 4 million, and they're up to 18 million. PENN just threw them $1 million for that fund as well. So I don't think that's what's driving PENN higher today, but at the end of the day, they're getting a lot of publicity through Portnoy. All right. SPY, This is the trade that I put on today, and I went into the really short duration. I just wanted to take advantage of some theta decay. Normally, when I'm talking about selling options and taking advantage of this high volatility spike that you can see massively spiking here in SPY, but I went into the January, 10 days to expiration. I'm taking advantage of that theta decay and that extreme volatility expansion that we've seen there. So all of those things I wanted to take advantage of. 45 days out, we're going to be heading into earnings. So I kind of want to stay away from all of that because that really could be a driver of this market. And heading into those earnings, I think people are going to be very bullish as they generally are ahead of those. So I decided to take advantage of this, playing some long deltas by selling puts. Yes, I'm selling puts in SPY, and I went into, like I said, the January, sold the 345 puts in there for $1.34, I think it was. So I sold the, I don't have my pen up, thought I was all prepared for this, but we did the January, went into the January, sold the 135, or sorry, not the 135 puts, I sold the 345 puts. Sold the I don't even know how to do that. 345, I was going to try and change that over. 345 puts. I sold the 345 puts in there for $1.35. Got a little ahead of myself. Now remember, for every one lot contract, that cost me $1.30, or not $1.35, but we got the contract multiplier on there. So $135 to sell those puts out of my account for every one lot that you do. Anyway, at that being said, we can see that that 145 is below, just slightly below this value area high. And if we continue this upward momentum where we have higher highs, higher lows, that should work out quite nicely. I don't think I'm going to get tested on that anytime in the next 10 days. I think that we're going to see some pretty nice moves to the upside, especially with that manufacturing PMI number. That was pretty darn bullish. Tomorrow we get some flash estimates out of the European region on the service sectors. So we're going to have to keep an eye out on that there, and the United States being a more of a service sector economy, that is probably going to weigh a little bit more, take a little bit more weight than a manufacturing number here in the United States. And that's all I've done so far, just keeping an eye on my portfolio, trying to get in there and take advantage of this high volatility, which is why I went into this SPY trade and put that on today. Add some more long deltas on this small correction. I don't think that we're looking at any major correction anytime soon, but wanted to take advantage of the high volatility today. All right, and that's about it. Check out Pro Trader Strategies. We are doing a course on guidelines for setting up options. That is what I was talking about at the beginning of the webinar, where we have streamlined that process for you to find the right strategy for any given assumption. It's not just pulling something out of the hat, you guys. We are very methodical about creating these guidelines for you all so that there is no real guesswork getting in and out. You can stay mechanical, take that emotion out of trading, which is paramount to being a long-term trader. All right, stop thinking about it as being money, but as probabilities. All right, so that's all I've got for you guys so far today. We do need to talk about our one last thing, which is our site disclaimer. So please take a moment to go over this, as we are an educational company. I'm not trying to get you guys to do my SPY trade. I'm trying to talk about how we take advantage of different things in the market. And I just have a bullish assumption in SPY. What's the best way to take advantage of that? Well, we have high volatility. If we have high volatility, I have a bullish assumption. It is going to lean towards a short put spread, or a short put in my case here. I'm not looking to define that. And I talk about all those reasons why in those webinars. I don't have enough time to really dig into the double of the details there for you today. I'm sorry. But if you check out those webinars, we go through these processes and dig into that over an hour on every single strategy. Yes, it's an hour-long webinar, but that's because I want to make sure you guys are clear of concept and make sure everybody's questions are answered. So please check that out. Also, give me a thumbs up if you like this video, or give me a comment. You know, what do you guys look at on any given day to come up with your directional assumption in an underlying. I would love to hear from you guys. I think it makes a better trading space. Kind of, we'll all learn from it, all right? Even this old dog can learn new tricks. All right, so if you can't take that, take it easy.